So when we're doing our homework, how do we know that a transaction has occurred? Well, in the homework, we know a transaction has occurred because we're given a nice tidy paragraph such as sold $929.60 of tires on account to Kingston Tires. But in the real world, transactions don't come from paragraphs, they come from source documents like this. So on the job, you're not going to know a transaction has taken place unless you have a source document like this invoice on the bottom of the screen. In the next accounting class, we'll learn how to interpret all the data on this. But for now, just know that on the job, you know that a transaction has happened because you've gotten a source document in the form of paperwork. So accounting data comes from source documents. There are many different types of source documents in business. The bank deposit slip is the document that shows the amount of cash received by the business. When a business buys supplies on account, the vendor, remember the vendor is someone who's selling us something, the vendor sends an invoice requesting payment. The purchase invoice is a source document that tells the business to pay the vendor. The invoice shows what your company purchased and how much it cost, telling the business how to record the transaction. Companies often pay their accounts payable with bank checks, another source document. The check and the purchase invoice gives the business the information it needs to record the cash payment accurately. And when companies provide services for a client, they send a sales invoice to the client. And that's how the client would know to record the transaction. The sales invoice is the source document that tells the business how much revenue to record. And finally, customer checks are processed by accounts receivable clerks. So let's look at the flow of accounting data from the journal to the ledger. So going from left to right, let's see what's going on here. So in the box on the left, it looks like we are making a deposit at the bank. So how do we know that a deposit has occurred? Well, the bank gives us a deposit slip. And then in the third box, someone needs to analyze the deposit slip. And it looks like cash is increasing by $30,000. And what's the other account? Because remember, every transaction has to have two different accounts. It looks like equity, in other words capital, would also be increasing. Other details on the deposit slip would be, well, which bank did we deposit it into and which account at that bank? Because remember, in the real world, businesses often have multiple checking accounts. And then in the fourth box, we would need to go ahead and journalize a transaction. Apparently it happened on April 1st. So you notice cash is being debited by $30,000, which means it's going up. And then Bright Capital, Bright must be the last name of the owner, is going up by $30,000 with a credit. And then finally you would take the debit and post it to the cash T account. That's the ledger. And then the last thing is you would also need to post the $30,000 to the capital account, but the publisher did not show that happening. So that's kind of an overview of the real world journalizing process. You get a source document, then you figure out, well, what's going on, and then you record it in the journal, and then from the journal you post the debit and the credit to the ledger so you know the new balances of the two accounts.